Happy New Year's and welcome back to the channel. This is the part 2 of the 2023 predictions. Part 1 is a look at Bitcoin and Bitcoin exclusively. I'll leave a link to that in the video description and of course at the end of this video too, that's within a macro analysis playlist, so you can watch it straight after this to get an understanding of what my views are around Bitcoin. But for this video, we're diving specifically into the traditional markets. These are the biggest markets that make up the entire financial system around the globe. So make sure you do watch this video if you want to get a full understanding, a holistic view of how I intend to trade the markets into 2023 and a few years beyond that will lead us into the peak of what we're anticipating to be the real estate market top, which is basically the biggest market in the entire world, and everything dictates around this particular market, or at least that is my thesis here on the channel. It's got over 200 years of data in the US and over 300 years of data in the UK. This thing works to a T, so don't go anywhere. Stick right here on the channel. Like and subscribe if you haven't already and you find some value from the content. Don't worry, I'll remind you again at the end of the video if you want to stick around until that to see what you get from it. But essentially, this is going to be the commodities, the indices, and of course some of the macro stuff, which we've been told should make us have a terrible 2023. Of course, I've got my bias here. I am a full-time investor and trader, so I need to pick a side to the market, but I'm prepared for both sides of the market, the ups and the downs. And if we aren't prepared for both sides, we can get left destroyed. We need to prepare for both. I'll be talking about both as well, and of course adding in my own bias. So make sure you do take this information away, research it a little more, and do what you want to do with it. Hopefully it gives you a great starting point for your 2023, because I think there are some big things to come throughout this half of the 2020s, this decade. So let's dive straight in, looking at some of the forecasts or unpopular opinions that I had and posted about on Twitter. Of course, any other links are also in the video description as well for my Twitter, Instagram, and the links that I'm using in this video. So some of these unpopular opinions, especially around surrounding the macros that are going on at the moment. SP 500 is bottoming, not crashing. Europe will not freeze this winter. And we're seeing that with the gas prices dropping. Real estate is not going to crash like many are suspecting. And we're starting to see that base out in many places. And 2023 could be that good buying opportunity. Second half of 2022 and first half of 2023, potentially buying opportunities with this bottom, waiting for confirmation. Bitcoin, potentially bottoming. We don't know the exact price. We're not worried about that. Remember, our goal is just to take a chunk of profits out of the middle. And I remain with this same view that most cryptos are terrible dollar cost averaging investments. I have not changed on that view basically forever since I learned my lesson in 2018. They are bad investments until they are confirmed uptrends. Now let's take a look at the stock markets and what I have forecasted for these into 2023 and this second half of the real estate cycle. I'll bring all of this together at the end of the video as well, so stay tuned for that. This is how I'm getting to those points. All right, so the Nasdaq, this has been one of those indices that we have said is going to be pretty difficult times throughout 2022 and probably 2023, and possibly won't even see really good gains like it has done since the GFC crash in 2009. I don't expect this sort of move to happen again from whatever base comes in the Nasdaq, and potentially this is going to fall even further and take out the October low. It's down nearly 35% from the high. It's still above the COVID crash low, but with Tesla dropping, then this is just going to show further weakness to the Nasdaq here. It is lagging the S&P and the Dow Jones. So this is probably likely we're going to see lower prices and come back to test some of these levels around 9,000 or 10,000. I'm watching very closely that 10,400. So for 2023, I suspect the Nasdaq is going to lag. It's going to have tough times. It still has not gotten back above any of these bear market downtrends, nor does it look like it's ready to test any sort of monthly swing tops. So it's in danger of coming further back throughout 2023. That leads me on to the S&P, and where we currently sit is a bounce off the 50% level, looking towards some of these high prices around that 4,200 points. We've had a pretty good monthly close here, getting above 3,800 points, and on the yearly also hasn't been too bad as well. If we take a look at the 12 months here, you can see that we did drop a long way, but we've closed above the open of the previous year. So this is the annual bars. A lot of what people are looking at saying that this could head down further, like what we saw in 2001. But I suspect that with this stronger close that happened at the end of the year, remember this is just the facts from the charts, not just my opinion, but the facts on the chart here. This stronger close here is going to lead us higher throughout the next few years, potentially even seeing higher close in 2023 than what we did in 2022. That's another major prediction that I've got for 2023 in the S&P. To the downside, definitely looking for any breaks below 3,500 points here, which is the 50% level and the current cycle low. Anywhere as low as 3,200 is going to be pretty safe going. It's previous support that happened in 2020 and the previous peaks as well in early 2020, late 2019. So looking forward, S&P is definitely holding its ground far better than tech stocks. To the Dow Jones, it is only 10% from its all-time high. So this is 30 of some of the biggest stocks in the US. And this in the past has led the cycle out. This is the tech wreck, and it basically broke into new all-time highs towards the end of the cycle, of course, and found a significant all-time high. I suspect it's going to do something similar and beat the S&P to a new all-time high sometime in the next few years. For now, Dow Jones is holding up relatively well, far above that 50% and not too far from the all-time high, breaking monthly swing tops. A lot of bullish signs are here on the chart. As I've said, it's not my opinion. We're just looking at what the chart is telling us now. So in the US, these aren't looking too bad. Tech obviously looking the weakest. Why doesn't this relate to cryptocurrencies? I think a lot of it will relate to cryptocurrencies, which is why I've said in the post here, most cryptos are going to be terrible dollar cost average investments. I would wait for confirmation. Yes, I know some people want to buy the lows. That's absolutely fine. That's a decision that you have to make. But if I want to remain in the markets for a long time as a long-term investor, I need to be putting some rules in place to protect my capital. Otherwise, 2022 happens again to most people and you get dumped upon. All right, so that is a look at the Dow Jones. Now, this is the UK market, one of the biggest financial markets in the world. It is 5% off its all-time highs. Interest rates have been going up. People are expecting housing to collapse, but the markets are telling us otherwise. This is made up of a lot of banks. Banks are, of course, making more profits, and governments are changing rules to make it easier for buyers in the market. They are changing the length of mortgages like we've seen in the UK. They are changing the rules of the game again, like what happened in the previous cycle that led to another peak. This is probably going to continue on for the rest of this particular cycle here. We're currently at this section of the cycle, and this will probably lead into around 2025, 2026. So we still have a few more years away, and the financial markets are showing us that they are very, very strong compared to the tech sector. And of course, it is boring. Who wants to buy banks and just make profits? That looks like what is happening based on the data on the charts. This market is made up of a lot of banks. It is 5% away from its old all-time high. Banks, of course, make their money from mortgages and loans. Interest rates are going up. They're making more money from that as well. This is going to continue, and governments don't want to see their housing markets collapse, especially leading in to a new presidential election year in 2024. That's coming up next year. And that, of course, we've also seen the years prior to the election year have had very good gains, 8 out of 10 times like we've shown before on the channel. What's also good for the markets is a dropping or collapsing US dollar. We were one of the first to call this potentially being the peak here in September of 2022. We saw the runaway bull market and the absolute hysteria that the media called out for this peak, saying everyone's getting into the US dollar, get out of your currencies, it's going to go south, the US is taking over. From that point, which you guys are probably aware of now, it's over 3 months ago, the market or the US dollar absolutely collapsed from that peak, coming in at around 115, now sitting at around 103.5, so nearly 10% down from that peak. I suspect we'll probably see some more downside, but right now it definitely is due for a correction in this bear market. So anywhere from around 102 to 103 where it currently sits, probably see a month or so to the upside. So that will, of course, potentially coincide with a drop in the in Bitcoin price and maybe the S&P as well, because this is due for a correction. We've seen it in all previous bear markets. You get several months down, 10 to 12 weeks, and then we see that little bit of a reversal in the price of the USD. So that could also push Bitcoin down as well. So this is looking to this Q1 of this big test, things getting worse before they get better into the later half of 2023. This is the natural gas that I've posted on Twitter. So make sure you are following me over on the channel here, of course, like and subscribe, all of my socials down here as well. And if you do want to get more out of this and learn how I'm reading the market across a broad spectrum here, looking at real estate, stock markets, commodities, how these cycles will come together, definitely go and check out this link here. It's absolutely free. And of course, our members link as well, looking at this education TIA premium. So this is all around how we invest. All right, so natural gas collapsed, absolutely dropped the hell out of the market from this peak of around 10 down to 4.4. Europe is not looking like it's going to freeze this year. There will be disruptions. There's things that will go on like that. But in terms of price being able to afford gas, it has collapsed like nothing else. This happened in a matter of months. And our members have been watching this. They've been seeing the cycles play out. This has been a very common pattern across the natural gas prices. Very, very similar patterns here. Media calling that there's going to be an absolute collapse for Europe. Meanwhile, investors have done otherwise. Traders have shown otherwise. Prices have absolutely collapsed, getting rejected at 50% levels and falling to new lows as well, taking out all previous swing bottoms, lower highs, lower lows. This is looking like the macros are playing out for a much better 2023 and beyond. We still have a couple of years left, at least from the look of this particular chart. So I've showed you a lot about what I think is going to happen there, my predictions and my forecasts for 2023. Q1, I think there's going to be a big test. We've seen it in the past. Bitcoin, like we showed earlier, and for the S&P as well. You can see we had some lows here in 2002, 2003. I'm bringing this particular part of the market up because this is where I believe we are in the overall macro cycle leading into this major bull run here. A lot of people will probably get caught out here thinking that we have to go down further for another 12 months, only to miss this first chunk of a move that leads into that final peak. Of course, anyone can be wrong. I don't want to tell you that it has to happen exactly like this, but I suspect that this is what's going on, and we'll probably see some sort of move to the upside over the next month or so, and then followed by a test to those lower prices again, like we saw in 2003, which happened around March. We know there's a significant timing around late Q1, early Q2 before we start to see that market move. Now, your key here is if we see a solid higher low form, then we're probably going to be off to the races for those next few years. Watch those areas get taken out. Watch the breakout of those monthly swing tops, like what's happening on the Dow Jones. You're seeing a break of the monthly swing tops. So if this happens to push up for January and then come back into a higher low for around March or April, that is going to be your key that things are going to get moving again. Same sort of deal for the S&P where we currently are. That is your key to see whether this market is going to be stronger than most people are anticipating, because we still hear a lot of talks of this having to break down and potentially even test some of these lower levels around 2,000 to 2,500 on the S&P. I think that is wildly going to be wrong, and I'm betting on the other side of that. But either way, just make sure you have a plan for both sides of the market. You have to play both sides of the market if you're a trader or investor. If you stick to one side, you'll get squashed. So have a plan for either way. I have a plan for the downside, I have a plan for the upside, and I have to take a position just like you would if you were going to war or playing a sport. You have to have a game plan for any number of strategies that are coming at you from the enemy, but you have to then pick one and go with it until conditions change. And right now, conditions haven't changed. Things are still looking up. Bottom processes take quite some time on the macro scale, like we've looked at many times. This can take many, many months, and that's exactly what has been going on since June. The price is above the June low, but of course, this is when we were looking at a low base getting formed. Now for a little nifty look at a roadmap that I will use moving forward into 2023 and beyond Before I get into it, make sure you like and subscribe as well if you found some value from the content. Hopefully that gave you something to go away and research more on, especially if you disagree with what I'm saying. It's absolutely okay. You must do your own research as well. So my roadmap into 2023, this is 2022 on this left side of the vertical line here. November, December, we've seen some lows in the markets. S&P and Bitcoin are going to be the main ones that I'm looking at for this particular roadmap. Real estate, we've got that bigger time frame here, probably basing out as well, looking forward into 2026 area. But for Bitcoin, S&P, rough sort of roadmap is what I'm looking at here to prepare myself in case the news comes at me with a whole lot of fear, doom, and gloom. This is probably going to be somewhere around the January or February period here. So probably around January or February, right? Then I'm looking at this as being approximately May or April, some sort of low. I've circled it, could be a lower low, could be a higher low. Now I want to make this really, really clear because I know some people get a little bit confused. So hopefully this is breaking it down to a level that you understand. If not, drop me a comment or question down below in the comment section. I'd love to hear from you there as well. So this is basically quarter one. It's going to be a tough time. Quarter two, probably somewhere up to about here. I don't know how much higher this is going to go, but we probably could see some sort of move up into summer or that quarter three. So this could essentially be quarter two, quarter three. We will get another low come in. So some sort of fearfulness probably later in the year, that late quarter three, early-ish quarter four, something like that. But I suspect the main thing here is we want to see that low, wherever that low comes in, to be above or near whatever peak comes in next. Of course, there are a lot of what ifs. We don't have the crystal ball. All we can do is prepare for the market and what we're anticipating next. And then from that, later in the year, probably see that market continue to rise. Let's see if it can break at that top. It's a pretty difficult thing to try and forecast 12 months in advance. But if we've got a bit of a roadmap, hopefully that helps us moving forward. The main key, the main question I have right now, looking closer to where we are, is what happens for this next dip? Is that dip going to be lower than November, December, or is it going to be a higher dip? And I think January, February is going to give us that key, depending on how much this market rises. Or maybe we see that drop. We honestly don't know, but we just got to be prepared for wherever we currently sit. And when I talk about that, maybe it's Bitcoin that drops, but the S&P doesn't drop as far and gives us a higher low. There are so many possibilities, so stay tuned to the market here. This is just a rough guideline, a rough roadmap here. Hopefully it helps some people out that are looking towards 2023 and making bank into those next bull markets. I have still not seen anything to change my mind that we are going to some sort of multi-year depression or recession that basically takes the market with it for an extended period of time. This definitely does not seem like that, even though the news is telling us that. And should we drop into a recession for a short, brief period, a quarter or two or whatever it might be, either way, the market gives us opportunities to buy regardless of what it is titled. Is it titled a recession? I don't care. I just want to see whether the market gives us opportunities to buy low and then eventually it gives us opportunities to sell high. Thanks again for your attention, guys. I know it was a long one, but of course we are doing 2023 forecasts for so many markets here. We went through Bitcoin, the Nasdaq, S&P, Dow Jones, major financial markets around the world like the UK, the US dollar, natural gas as well, because this was some of the biggest headlines that happened in the market now. And of course, these are going to change throughout 2023. It potentially switch to something like copper or oil. We just don't know at this stage. Either way, this is what I'm looking at for the S&P and Bitcoin. I hope that helps you out a ton. Let's revisit this again throughout the year. Stay tuned to the channel. Plenty more coming up on crypto, stocks, and of course, real estate. Wish you all the best into your 2023. Let me know in the comments down below what your thoughts are for 2023. Will we close higher than we opened or lower than we opened? Until next time, peace out.